Good evening, my YouTube family. How's everybody doing today on this Wednesday evening? Hopefully everybody is doing wonderfully blessed, hanging out, chilling with their loved ones, and hopefully you guys had a green day in the markets. I know the markets today started off rocky, guys, but once Jerome Powell from the Fed spoke, then, the sentiment was different and the markets turned to the green. And so hopefully you had a great day in the markets. This is Robin Hood and Stock Talk, Muhammad G. For those of you that don't know, well, now you know. I'm the guy that brings the latest, the greatest in them stocks for your radar. So hopefully your account and my account will go up in them dollar signs, guys. This is none of this is financial advice. This is just me merely sharing my thoughts and opinions as I invest in the stock market in my Robinhood account. With that being said, guys, if you guys can show me some mad love and destroy that like button and help me out with that YouTube algo and hit that notification bell so you can be notified when I come through with the latest and greatest. Guys, we're not going to be too long, just long enough. We're going to be talking about a growth stock, guys, a recovery stock, which I think is going to do great from here on forward, guys. It's a construction company, and they build homes, guys. It is none other than Grbk, as you can see right here on my screen. So, without further ado, let's get on in it. All right, Grbk. Who are they and what do they do? Well, I'm about to let you know. Grbk Partners engages in residential land development and home building. It operates through the builder's operations and land development segments. The builder operations segment consists of the building operations southeast and builder operations central segments. It offers customization options and builds energy efficient homes located in the metropolitan area of Dallas, Texas and Atlanta, Georgia. The land development segment sells finished lots or options lots from third-party developers to their controlled builders for home building operations and provides them with construction financing and strategic planning. The company was founded by James Brickman on April 11th, 2006. Guys, I think this one is going to do very great. You know what I mean? With Mr. Biden about to pump that, I think it was 1.2 trillion for infrastructure work, guys. I think it's going to do well, right, guys? And I think it's a hidden gem, guys. Not too many people probably even know about this company, guys. But I'm going to read a quick article, guys, about it. Then we'll get into the fundamentals, and then I'll close out with another little article, guys. If this sounds good to you guys, hit that like and subscribe. All right, let's get on into it, guys. Let me read this quick article here. It says, looking for a growth stock, 3 reasons why Grbk Partners is a solid choice. Investors seek growth stocks to capitalize on above average growth in financials that help these securities grab the market's attention and produce exceptional returns. That's what I'm looking for, exceptional returns. I don't know about you guys. But finding a great growth stock is not easy at all. It isn't, guys. That's because these stocks usually carry above average risk and volatility. In fact, betting on a stock for which the growth story is actually over or nearing its end could lead to significant loss. And that is so true because that has happened to me. However, it is pretty easy to find cutting edge growth stocks with the help of Zacks Growth Style Score, part of the Zacks Style Score system, which looks beyond the traditional growth attributes to analyze a company's real growth prospects. Guys, you know what I mean? With interest rates still damn near to zero, you know what I mean? People working at home. People are going to continue to work from home even once the economy opens up. We have vaccines rolling out, guys. You know what I mean? So the point I'm getting at, guys, is the home real estate is on fire still, guys, regardless of a global pandemic. You know what I mean? The housing market is still doing great. I think a lot of it has to do with, interest rates being very low. Who doesn't want a good interest rate when you own a home, right? I own my home, and I have a pretty okay interest rate, right? But it could be better, right? So I just wanted to throw that out there. And that's why I want to put this one on your guys' radar. Right? It says Grbk Partners is on the list of such stocks currently recommended by our proprietary system. In addition to a favorable growth score, it carries a top Zacks rank. Research shows that stock carries the best growth features consistently beat the market. And for stocks that have a combination of a growth score of A or B and a Zacks rank 1 strong buy or 2 buy, returns are even better. While there are numerous reasons why the stock is of this real estate company is a great growth pick right now, we have highlighted 3 of the most important factors below. Number 1, earning growth. Earning growth is arguably the most important factor, as stocks exhibiting exceptionally surging profit levels tend to attract the attention of most investors. For growth investors, double-digit earnings growth is highly preferable, as it is often perceived and indicated of strong prospects for the company under consideration. While historically EPS growth rate for Grbk Partners is 23.3%, investors should actually focus on the projected growth. The company's EPS is expected to grow 35.9% this year, crushing the industry average, which calls for EPS growth of 9.3%. That is a big difference. 35.9 to 9.3, that is a big difference. Cash flow growth is number 2. Well, cash is the lifeblood of any business. Higher than average cash flow growth is more important and beneficial for growth-oriented companies than for mature companies. All right, guys. I'm actually multitasking right now, guys. I'm actually barbecuing. Can you smell it? I'm making some ribeyes right now, guys, and I'm making some hot dogs. I got some jalapenos and serrano peppers on the grill as well. You know what I mean? If you want a taco, come on over, guys. It's almost dinner time. I don't know if you guys can hear my meat sizzling, guys. But anyways, I just wanted to throw that out there, let you guys know I'm actually multitasking. That's actually why I'm not on the screen right now. I'm kind of cheating, guys. Sorry, because it's kind of late. And I've been wanting to make this video since like 4 o'clock. So I apologize for it being kind of late. It says right now, year over year, cash flow growth for Grbk Partners is 90.1%, which is higher than many of its peers. In fact, the rate compares to the industry average of negative 12.3%. While investors should actually consider the current cash flow growth, it's worth taking a look at the historical rate too for putting the current reading into proper perspective. The company's annualized cash flow growth rate has been 40.4 over the past 3 to 5 years versus the industry average of 12.1%. That's another great thing, guys. And the third reason says promising earnings estimated revisions. Beyond the metric outlined above, investors should consider the trend in earning estimate revisions. A positive trend is a plus here. Empirical search shows that there is a strong correlation between trends in earnings estimated revisions, near-term stock price movements. There has been, what the heck? Says there has been upward revisions in current year's earnings for Grbk Partners. The ZAC consensus estimate for the current year has surged 7.2% over the past month. Bottom line, Grbk Partners has not only earned a growth score of B based on a number of factors, including the one discussed above, but also it carries the ZAC's rank number 2. Wow, they have a B and a number 2, guys. They have a buy and a B. That's very good. You know, ZAC's is a well-known place to look up information on stocks, guys. So I just wanted to throw that out there as well. You know what I mean? That's one of the places where I look up my information, guys. Simply Wall Street. What is the other ones I do? Investors Observe and Insider's Business Daily, right? Those are where I do get a lot of my research from, guys. So if you guys are curious where I get my information from, I don't just pull it out of the air, guys. I pay for prescriptions and get my information that way, right? So you guys get top of the line information when I do my deep dives into these companies. And it says you can see the complete score of today's ZAC's rank. Okay, yeah, so that was that story, guys. And I'm gonna get into a little bit of the fundamentals here, guys. Then I'll close out with another little brief article, guys. So it says here, let me get my notes here. Sorry, guys. It says Grbk Partners is currently trading at $23.49. Analysts give it a buy and a price target of $31.68. It gained 3.83% today. It fluctuated 6.54% from a day low of $22.07 to the day high of $23.51. Then just barely pulling back a couple cents and closing the day out at $23.49. It has risen 6 days in a row, guys. It is now up 17.96% in the past week, 13.42% in the last month, and 271% in the last year. Guys, you know, like I always say, you want to find companies that are just steadily inclining, you know what I mean, on a upward momentum, right? And this one has been, steadily grinding its way up, slowly but surely, regardless of a global pandemic. And it shot up 271% throughout the year, which is excellent, guys. You know what I mean? That is something that I always look for in a company. I'd rather have it gradually shoot up than parabolic, because what goes up fast comes down even harder. So just wanted to say that. Yeah, okay. Okay, says they have a market cap of 1.1 billion. Its 52-week high is $25.05. Its first level of resistance, guys, is at $23.38. Second level of resistance is $23.44, and that third level is $23.87. And after that, it's price discovery into the moon, hopefully, right? And its first level of support is $22.42, guys. So right now, it's currently sitting, obviously, in between that first level of support and first level of resistance, guys. You know what I mean? But I think it's going to continue to climb up and continue to go upward, guys, not down. Just being on how bullish the market is on the real estate sector and construction, and there's just a lot of good stuff going, guys, that I think, obviously, yeah, it's going to pull back here and there, but in my opinion, I think it's just going to continue to move up and reach newer highs. Its second level of support, guys, is at $22. At $22.08. If it continues to dip any lower, guys, that third level is at $21.52. Their earnings, guys, are forecasted to grow at 93.7 over the next year. That's freaking very impressive. Their revenue for 2020 was $976 million, and their earnings for 2020 was $113 million, guys. In return versus equity is forecasted to be high in 3 years to 20.4%. In the past 5 years, guys, their annual earning has grown 38.4%, which is pretty darn good. In the past 3 months, guys, the co-founder has bought $19 million worth of shares. Yes, you heard, $19 million worth of shares in the past 3 months. That is freaking good, and that is obviously, in my opinion, a very great sign when you have a company owner, just insiders in general, and they're buying $19 million worth of shares. That is a great bullish sign, right? And you have institutional investors own 37.6%, hedge funds own 34.4%, individual insiders 4.6%, and retail investors such as you and I 23.5%. Now, the big dogs. Which big dogs own this company? Well, you have none other than the world's biggest investors, BlackRock, right? They have $72.8 million worth of shares. You have Vanguard, who has $36.3 million worth of shares, guys. You have Greenlight Capital, right? I don't know if you guys know who they are. If not, look them up when you do your own research. They're a well-known company out there as well. They own a whopping $406 million worth of shares. That's a lot of freaking shares, guys. 406 million. That's insane. Not insane, right, guys? But you get my point. That's a lot of freaking shares, guys, to be owning a company. Obviously, they either know something, guys, right, or they're just very bullish on that company to own that much shares, right, guys? Because they obviously see the potential for profits in the near foreseeable future. That's why these companies, obviously, these hedge funds and big guys such as BlackRock and Vanguard, invest heavily in some of these companies, right, guys? Because they see profits for their clients and for themselves, right? And that's the whole object of investing, is making your account go up, hopefully sooner than later. Guys, I am going to finish out with another article here real quick, right? For these guys here, right? It says, despite some industries suffering due to COVID-19, several have flourished as well. Tech has attracted the spotlight due to its essential role in transforming our society throughout the ongoing pandemic. That is so true, guys, because throughout 2020, I was heavily invested in tech, and I did pretty good, right? I made quite a bit of profit, right, guys? I made a lot of gains in 2020 investing in a lot of tech, right? Because that's who a lot of people were investing in 2020. However, the stay-at-home economy also has benefited other markets, including increased the demand for home improvement products / services, as well as quality housing in general. Two good examples of the former's increased demand are Home Depot achieving record results over the past 2 quarters, as well as Angie Home Services. for the digital side of things, achieving its highest quarterly revenues to date in quarter three amid heightened demand for home service professionals. The stay-at-home economy has transformed the concept of housing, which seems to be becoming a more important part of our lives. It's so true, with many jobs likely to remain remote, right? Even post-pandemic. Yeah, a lot of people aren't going to go back to the offices, guys. A lot of people have the option to work from home now, guys, which is very good, right? So, you know what I mean? That's why that's another bullish sentiment in the markets. Combined with the current ultra-low rates environment, home builders enjoy favorable growth catalysts, with one particular home builder taking the industry by storm. In the article, we want to take a look at Grbk Partners, ticker GRBK, the fastest growing publicly traded home builder. The company finished in 55th place on Fortune magazine's 100 fastest growing companies list and was one of only 4 home builders to include in the 2020 list. That's a pretty good achievement, guys. While the stock had a terrible performance in the past, shares have undergone a significant rally over the past year, gradually reflecting the company's explosive performance. Yeah, guys, like I said, with rates being low and so on and so forth, right, guys, a lot of people want to own homes. My brother, he just bought a home about 6 months ago, right, guys, and it's still not really easy or really hard to get a home. But the point I'm making is, interest he got, I think it was like ridiculous low interest rate. It was like 1 or 2 points. It was ridiculous. It was better than mine. You know what I mean? I'm a little jealous, that knucklehead. Anyways, revenues have been growing consistently, with Grbk's lot controlled and owned also growing at a rapid pace. Even during the ongoing pandemic, Grbk has seen unprecedented demand for its homes as people adapt to post-COVID lifestyle. With an extended appreciation for their living spaces, houses are serving as offices for many during the current times. At the same time, people want to have a nice patio, right? Who doesn't want to have a nice patio where they can grill for their family and friends during such times of limited outside activities, like what I am doing right now? I am grilling outside in my back patio. Hence, people aspire to own their own high-quality place, which has become a more meaningful space. Grrbk has not waited to increase demand, delivering revenue growth of 31.4% in the latest earnings report. What the most impressive metric in our company's latest earnings release view is that Grbk managed to expand its owned and controlled lots by over 31% to an all-time high of 12K lots, despite commencing over 700 homes over this period. More specifically, Grbk added around 3.6K lots owned and controlled at 16 different communities across Dallas and Atlantic during Q3. This is quite impressive since it opened up a runway for continued growth ahead. As I mentioned, the company has succeeded in expanding its local presence and sales while prudently and effectively managing its financials. The bar chart below displays the company's debut to total capitalize against the industry peers. As you can see, Grbk is currently the lowest leveraged company among public builders. Sorry, guys, if you guys can't see the chart down there. Maybe if you do, look it up on Seeking Alpha yourself, and you can see the chart a little better, guys. Sorry. The company has been carefully financing its growth both through thoughtful stock issuance and cash generated from operations, avoiding burden its balance sheet with additional debt. We believe that the company should be able to continue its prudent expansion due to its industry-leading gross margins, which are currently hovering just below 25%, a great ratio for home builders. Finally, a tangible catalyst that should assure investors of its continued growth going forward is Grbk's spectacular backlog growth of 73% year over year to $553 million, which amounts to around half the company's annual revenues. That's pretty darn good. Peer comparison and valuation. Before we jump into stock valuation, it is important to get a clear picture of how the company compares against its industry peers and how that reflects on its stock price. I'm sorry, guys, if this is taking long. I will almost be done here in about another 30 seconds. To a minute. We showed some important metrics above, but the company has been kind enough to show where it ranks amongst its peers in various relevance. As you can see, the company ranks first in terms of highest revenue growth. Wow. Interest coverage, lowest leverage, and pre-tax ROCE at the same time. With that in mind, let's compare the stock's valuation against those companies. As you can see in the graph below, home builders are valued quite closely, with Grbk in the high range, governing at 8.8 times in forward net income. In our view, considering the company's industry-leading metrics, we believe that the stock should have a higher multitude attached, closer to the low teens. Its revenue at a lot supply growth alone should easily justify it. If the company is to retain its current valuation, investors are likely to see massive returns as profitability continues to grow, as it is current explosive rate, similar to the multi-bagger gains it has delivered over the past few months. Final thoughts, guys. then we will be done. While Grbk's history is quite turbulent with spectacular shareholders lost up until 12/14, management has turned the ship around into what is now a rapidly growing and financially healthy company. Sorry about that, guys. My dogs are barking. It says, however, we can't ignore that the company remains attractively valued considering its industry-leading metrics. If the company's robust backlog and increased demand for new quality homes results in revenue growth trajectory enduring, which it should, the stock should be able to deliver market-beating returns going forward. Guys, that's what I have for you today. It was Grbk, ticker GRBK. Hopefully you found this video useful. If you did, guys, like and subscribe. And it helps me out with the YouTube algo, guys, and I totally appreciate it. And it is free, guys. It don't cost you nothing to help out the channel. And once again, too, I just wanted to say thank you to all my new subscribers out there, guys. Man, thank you so much. I appreciate it, guys. Hopefully I didn't take too long today, guys. Hopefully I was just long enough. You guys have a wonderfully blessed night, and I see you guys tomorrow on the next video. And hopefully tomorrow we have another green day. This is Robin Hood Stock Talk with Jaime G. Peace.